Good afternoon and welcome. You are watching us in the Suzlon studio at ET Now. I'm Nupur and joining me is Rabinder. Over the next half hour, we're going to be taking you through all the stocks that are buzzing in trade today. And also, of course, joining us on the broadcast today will be Ashish Kyal. He's the founder and CEO of Wave Strategy Advisors. Hi, Ashish. Thank you very much for being with us on Market Fatafat.
Yes.
All right. Moving straight ahead to the stock that is buzzing in trade today, that's Nibe Industries. It is buzzing on a big order. It has secured a massive 563 crore rupee contract from the Indian Army to supply 30 loiter munition systems. Now, this single order value significantly exceeds the company's entire annual sales for the trailing 12 months. That's around 455 crore rupees. Now, the Army contract comes with a tight 12-month execution timeline, guaranteeing that this massive influx of capital will hit the balance sheet immediately rather than over several years. Now, its subsidiary, Nibe Space, just added a steady 12.15 crore contract as well for GIS surveying, executable over the next 42 months, reinforcing a long-term cash flow. So, Ashish, I believe you've picked up MCX. How's that looking in terms of the technicals?
Hi, afternoon to you and all the viewers. If you look at the overall undertone of the capital market-related stocks, those have been doing exceptionally well. And I think MCX has given a very strong breakout from the levels of 3,000. We can expect the stock to move towards the level of 3,250 on the upside. And on the downside, one can maintain a stop loss for the stock at 2,960 levels.
Okay, moving next to Strides Pharma. Strides Pharma is in focus in today's session after on the positive note that US FDA inspection at company's Bangalore flagship facility has been formally closed with all 5 Form 483 observation addressed through corrective and preservative actions or CAPA. And importantly, the inspection outcome has been classified as VAI, which is voluntary action indicated, which is a positive development and removes some of the regulatory overhang around the future filings and approvals. So back of this positive news flow, Strides Pharma is in focus and the stock is up more than 3 to 4% on an intraday basis.
All right, Ashish, you've picked up Dalmia Bharat. That's the next one. Tell us a bit more about why you've picked this one.
Dalmia Bharat has been consolidating for quite some time, and if you look at the sector, that has shown a very strong recovery also on the upside. The stock has given a breakout out of nearly 12-13 tradings of consolidation zone and is possibly headed towards the level of around 2,000 where the prior swing high is placed. So 2,000 can be the target for Dalmia Bharat. On the downside, one can maintain a stop loss for the stock at 1875 levels.
All right, now the next one that we've been tracking, and this has been doing considerable activity for the past couple of days, is Zaggle Prepaid. It's extending its strong gains for the second straight day today. It has rallied nearly 17% in the past 3 sessions. The stock has seen significant gains yesterday as well after ace investor Vijay Kedia owned Kedia Securities acquired 20 lakh shares or 1.48% of stake in the company for 32.94 crore rupees. This is at 164 rupees per share. And in fact, Galaxy Surfactants has delivered a robust Q1 and has signed a partnership growth charter with Unilever. K. Natarajan, the managing director, has spoken to us and highlighted that the EBITDA and ton growth is being driven by initiatives that have been undertaken in the last year or so, and the company is targeting a 6 to 8% volume growth in FY27.
First of all, what is the main contributing factor is the way structurally we have our specialty ingredients growth that is happening based on all the efforts that we've been putting over the last 2 years have started yielding results, which is one of the main drivers in terms of why we are looking at higher guidance on EBITDA per metric ton. The other also in terms of the way that we're looking volume growth to come back, we have been flat or slightly negative in last year and the previous year, financial year. That essentially means that the operating leverage that we will have on our performance surfactants plus the mixed benefit in terms of specialty ingredients business really progressing well this year gives us the confidence to raise the EBITDA guidance per metric ton.
And Ashish, coming back to you now, you've picked out RBL Bank, so that's trading in significantly higher today.
Yes, if you look at RBL Bank, the stock has formed a flag pattern, gave a breakout, found support at a crucial 20 days average, and it has been an outperformer compared to Bank Nifty. If you look at Bank Nifty, we have seen it still substantially below the lifetime high levels, but RBL Bank is touching its near 52 weeks high. So that shows an outperformer. So on the upside, we can expect the stock to move towards the level of 420. On the downside, the support for the stock is going to be at 380 levels.
Okay, now shifting focus to TurtleMINT, as TurtleMINT is in focus after the positive brokerage note. Jefferies has come out with the note and they have initiated coverage with buy rating with and target price rupees 190, which is approximately more than 25% upside from the current market price. And Jefferies see TurtleMINT as a strong play on India's insurance penetration story, given the relatively low penetration levels and with the growing adoptions of digital insurance distribution. And TurtleMINT is currently third largest player with around 20% market share, and while its POSP channel remains the fastest growing distribution channel for the company, giving the company access to B30 plus markets. And they say that this growth is expected to be and the overall growth is expected to be driven by 31% CAGR in premium along with the higher along with the higher rates. So back of these positive notes from the Jefferies, TurtleMINT is in focus and the stock is up more than 3%.
All right, next moving on to the tech sector. I think, Ashish, you've picked out Dixon Tech. Now, that's rising sharply, outpacing a broadly weaker Indian market. So tell us how is it looking on the technicals to you?
See, Dixon Tech has slowly and steadily climbed the wall of worry, I would say. The stock was facing some hurdle around 14,500. It has managed to break that as well and is trading near the day's high. So overall undertone for Dixon Tech is positive. We can expect the stock to move towards the level of 15,500 on the upside, and the stop loss can be placed at the level of 14,200.
All right, moving to another segment that is really buzzing today, that's the sugar stocks. They are seeing a bit of activity as global supply concerns have lifted prices, while tight inventories and festive demand have pushed Indian sugar prices up nearly 20% in the month of August. Now, Sri Renuka Sugars, Atul Chaturvedi says that if prices remain elevated, sugar companies could see a marginal improvement in profitability. Listen into what he told us.
There is some what of a feeling that during the peak crushing season, peak festival season, prices could spark. And that is what is the spike, what we are seeing as of today, is a reflection of that. But having said that, the government has come up with a lot of actions to ensure that the sugar availability is improved. In fact, they've come up with stock controls, and bulk consumers need to consume within 10-15 days and things like that. If the prices remain elevated, I think the profitability should marginally improve. But the flip side is that next year, the distilleries attached to the sugar factories might suffer big time, because diversion towards ethanol, cane juice diversion towards ethanol, I'm sure it's going to be a casualty, because at the current price levels of ethanol, which government is giving, which is about closer to about 65 rupees a liter for cane juice, which translates to about something like 37 rupees a kilo of sugar, I don't think any mill would be bidding for cane juice ethanol. 1st of October, effective 1st of October, the inventory level for the country could be closer to about 3.5 million tons, which is obviously that is reflected in whatever is the situation in mill-wise.
All right, so that's the word coming in on the sugar stocks that are buzzing quite a bit in trade today. We slip into a very short break, but when we come back, we'll be taking you through more stock buzzers. Stay with us. Welcome back. This is Market Fatafat and you're watching us on ET Now. And looking at the next stock that we are tracking today, that's Power Finance Corporation. Now, it's trading with cuts of over 2% on brokerage views. Now, Morgan Stanley has downgraded it to equal weight from overweight earlier. The target price has also been cut from about 410 rupees to about 410 from 510. Now, the brokerage said that the gap between the company's loan growth and the credit growth in the power sector has become too large to ignore. Now, Power Finance Corporation has seen its loan growth moderate sharply, even as credit growth by the banks and across the power sector has accelerated. Ashish, you've picked out Persistent for us. Tell us a little more about it.
If you look at as I've earlier mentioned, the overall tech side index looks to be well placed, and Persistent system, also similar to that of Dixon Tech, has shown a very strong breakout. The stock had a very strong hurdle of around 5,600, and it has managed to trade above that now as of now. We can expect the target on the upside at 6,000 over the near term, and possibly much higher if one can hold from a 1-year perspective. On the downside, the stop loss can be placed at 5450 levels.
Okay, now shifting focus to railway sector, Titagarh Rail is in focus, where a company has received approval by Indian Railways as an unauthorized vendor for 1200 annual unit traction motors. And after this, Jeffries has come out with the note, and they believe that this positive development could estimate a 4 to 5% annual revenue accretion from the order, and more importantly, they believe that the order paves way for companies' plans to move up to technology value chain through backward integration. They also say that while Titagarh is already producing traction motors for locomotives and EUMs, the recent qualification enables meaningful order inflow for the company. So, back of this positive news flow, stock is up more than 1.5 to 2%.
All right, Ashish, coming to you next. Now, you've picked out 361. Now, we do see quite a bit of outperformance there.
Yes, 361, if you look at it has shown a strong break above the level of 1180. There is some short-term profit booking that we are seeing from the higher levels, but I think this is an opportunity for anyone as a short-term trader to buy the stock at these levels of around 1200. We can expect the stock to move towards the level of around 1250 on the upside, and on the downside, the stop loss can be maintained at 1170.
All right, so the next one that you have picked out is Sai Life. Tell us a bit more on that one.
From the pharma space, we can see that the life sciences segment has been doing well across the space, and Sai Life has shown a very smart breakout from the flag pattern. Currently trading around 1480, we can expect the stock to reach towards the level of around 1600 on the upside, and stop loss can be maintained at around 1420.
Okay, and shifting focus now to actually staying with the pharma sector really. Now, stocks of Glenmark Pharmaceuticals are buzzing today as it has received approval from the US health regulator for its generic version of fluticasone propionate, a nasal spray indicated for treatment of rhinitis. Now, the approval by the US FDA is for the nasal spray of strength 0.05 mg. Glenmark Pharmaceuticals, of course, is the bioequivalent and therapeutically equivalent to the reference listed drug, and that is why we are seeing considerable activity on that counter. Okay, Ashish, coming back to you. I think you've picked out Eternal. So how does it look on the technicals to you, and what do you see in the near term?
See, if you look at the overall trend of Eternal, it has been slowly and steadily rising on the upside, and a very strong outperformer compared to that of Swiggy. And the stock was having some short-term resistance at 320. It has managed to break that as well, and we can expect it to move towards the level of 350 eventually. On the downside, one can maintain a stop loss of 317 levels.
All right. Let's quickly take a look at how the markets are doing currently now. Nifty trading above the 24,200 level. Actually, we are seeing broadly everything in the greens today. Nifty IT, of course, doing well, as well as the mid-cap space. We are seeing it upwards of 0.6% there. So broadly, it does look that we may have left that period where we saw consecutive losses on the bourses earlier. A quick word from you as well, Ashish. What are you seeing in terms of market activity today?
See, if you look at the overall market activity, I think there is some kind of a positivity that we are seeing after 12 trading sessions on Nifty. Prices have shown a very strong move with a gap up. It is consolidating there, and it has happened after 12 days. We are seeing a possible close above the prior day high. So that shows and suggests that we can expect a move towards 24,320 over near term and possibly higher towards 24,400 levels as well. However, having said that, on the downside, the crucial support is going to be the gap area, which should remain intact. And I think on the downside, 24,080 is a very, very important support. So that's a very important crucial level that one should maintain an eye on. As long as that is intact, I think any dips can be used as a buying opportunity.
All right, and let's now move on to the primary markets. And IPO momentum remains strong so far this fiscal, with 36 issues listed and several delivering substantial listing gains. 7 IPOs opened this week with a combined issue size of almost 7,000 crore rupees, while 3 IPOs have lined up for next week and they could raise another 2,500 crore rupees. Rabinder is now joining us to talk to us about the IPO frenzy that we are seeing.
Well, as in FY27 so far, 36 IPO has listed on NSE, and if we talk about some of the companies that are the gainers, then Indo MM lead the pack with 53% listing day gains, and the stock is now trading about 95% from its issue price, which is followed by Bihari Lal Engineering, as Bihari Lal Engineering has gained 82% on its listing day and remained more than 82% of its listing day gains, while one EMI Technologies has also delivered 22% listing day gains and is currently up 76% from its issue price. On the other strong performance also include Dhoot Transmission, Laser Power, Technocraft, Milky Mist and Ship Rockets, which also had delivered a strong return since its listing and on a listing day. Coming to IPO pipeline, then the 7 IPOs opened this week and with the combined issue size of rupees approximately 7,000 crore. And looking ahead to next week, 3 IPOs are currently lined up with Symbiotic Pharma Lab, High-Tech Engineering and Skyway Air Services with a combined issue size of rupees approximately 2,500 crore. And when we look at the larger IPO pipeline, some of the major names include NSE, Reliance Jio Platforms, Zepto, Muthoot FinCorp, Garuda Aerospace and Make My Trip. And the IPO pipeline is expected to remain strong for the second half of FY27, with the SEBI chairman recently said that they indicate that the plans to raise more than 2 lakh crore to IPO pipeline, highlighting continued investor interest and strong fundraising activity in the market.
All right. Thank you very much for that one, Rabinder. So we are expecting that IPO pipeline to remain abuzz. Ashish, appreciate your taking out the time to join us on Market Fatafat. Thank you.
Thank you.
Well, with that, it is a wrap on Market Fatafat. Thank you very much for joining us. But do stay with us on ET Now as we bring you more.